Hi, I'm Champion Trader Kevin Davey, and today I'm going to talk to you about some of the advantages and disadvantages of futures trading. So let's get started. First off, before I get into the advantages and disadvantages, check out my article on the topic. You can go to the description, click on the link, and you'll get a lot of information on the advantages and disadvantages of futures. There's other articles on my site that can tell you if futures trading's for you, so please check them out. Okay, so let's talk about some of the advantages of futures trading. Well, first of all, the biggest thing with futures trading is it can be leveraged, meaning you can control a whole lot of futures for a little price, a lot more than stocks. And that can really up your returns. Think about it this way. If you have a house and it's worth, say, $200,000 and it goes up to $300,000. Well, let's say you paid all cash for the house. You paid $200,000 for it. It's now worth $300,000. So you basically made 50%, right? But let's say you only put $10,000 into the house. You were still controlling $200,000 worth of property, and now it's worth $300,000. So really, your $10,000 investment turned into a $100,000 return. So your return is a lot bigger. That's what leverage can do for you. As you might guess, it's also a disadvantage, which we'll talk about in a second, but it is one of the big advantages of futures trading. Another advantage is in diversification. Now, the stock market, hey, that's great, but a lot of times in a bear market, all stocks will do bad, or at least most of them. They all become sort of correlated. With futures, it's a little bit different because you have such a wide array of markets. You have gold and other precious metals, you have crude oil and other energies, you have currencies, you have interest rates, you have ags and softs. So just because one group's going down doesn't mean they all will go down. So if you trade a little bit in each one of those sectors, you have diversification. And that turns out to be a real key to successful futures trading. So that's definitely an advantage. And the third key, probably less so than the other two advantages, is there's usually less competition. The futures market doesn't have the volume that a lot of stocks have. That means there's less competition. And a lot of times, if there's less competition, it's easier to do well. Now, that's not the best advantage, but I've definitely seen cases where less people in the market seems to work out better. So let's talk about the disadvantages. The first one is a counterpoint to the advantage of leverage. Leverage is a double-edged sword. And just as easily as you can make a lot of money with leverage, you can lose a lot of money with leverage. Watch out. It's good to be leveraged to a point, but if you're over-leveraged, sooner or later it's going to get you and you're going to get wiped out. So that's a huge disadvantage to futures. You can lose a lot more than your initial margin with it. A second disadvantage of futures is they're more complicated than stocks. Stocks are fairly simple as far as, oh, hey, I buy a stock, I sell a stock. With futures, there's different contract months and they expire and you have to do things like roll over. And you're like, what's that? Well, that's when you go from one contract to another. There's a lot of little nuances. There's first notice day, there's delivery day. You want to make sure, and your broker will help with this, but you want to make sure you don't end up with 40,000 pounds of live cattle on your front lawn, right, when you get delivery. That's what people always joke about, but it can happen. Obviously, your broker will do everything they can to help prevent that, but there's a lot of weird stuff with futures that people don't particularly like, and it kind of scares them, which is understandable. The complications with futures That's a definite disadvantage. And the third disadvantage with futures trading is what's called a lock limit situation. Now, back in the old days, probably when I first started trading, this happened a lot more. What a lock limit is the exchange sets a price every day and they say the price cannot move above or below that amount. And if it does, all trading stops. And that's why you might see some futures charts with just a little dash for a day. That's a lock limit day where you really could not get in or get out. There's no trading that occurs, or very little trading. Certainly in a lock limit up situation, you can't buy. Now you could probably sell, but who'd sell knowing there's a lock limit? Because tomorrow the price is probably going to go up. Thankfully, lock limits don't happen that often, but they still happen. Take a look at a lumber chart from January of 2022, for example. You'll see lock limits up and lock limits down. And I was trading that market at the time, and let me tell you, it's a little freaky to be trading a market where no trading happened and you're either up a bunch on the day or down a bunch, and there's nothing you can do about it until hopefully the next day. And sometimes those lock limits continued for days and days. That's a definite disadvantage of futures if you're on the wrong side. If you're on the right side, then you love it, right? But it can hurt you. Way back when mad cow was a thing, this is the early 2000s, I was caught in a lock limit down. I was long live cattle, and day after day it was lock limit down, and I was losing money and I could not get out. Not a good feeling. Okay, so those are 3 disadvantages of futures. If you like this video, give it a thumbs up, hit the like button, leave a comment. I'd appreciate it. I'm Champion Trader Kevin Davey. Have a great day.